Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Fed fight pushback. The Trump administration's probe into the central bank triggers a backlash in Washington, with key Republicans warning Fed independence is being eroded. Meanwhile, the yen weakens and Japan's stocks surge to record highs after a report that Prime Minister Sanae Takaichi plans to call a snap election for next month. Plus, President Trump threatens new tariffs on countries doing business with Iran, a move that risks upending America's fragile trade truce with China. Here's the picture in your markets this Tuesday morning. We are looking at stocks at record highs in the Asian session, fueled partly by that report of a snap election coming in Japan, but also futures higher in Europe. Traders looking for opportunities outside the US. Futures lower, therefore, on Wall Street, but do note the S&P managed to recover yesterday despite those threats to Fed independence. Speaking of which, what could change this picture? The risk events on the horizon for today. We've got US CPI coming later on. We've got US bank earnings as well. Is it that traders focus on the bank earnings more than the CPI? We shall see. And then at 7 p.m. London time, we'll hear from the president himself speaking at the Detroit Economic Club. Of course, ostensibly, this is about car factory openings, but we shall keep an ear open for any commentary on the Fed and geopolitics. It's a busy one ahead. Let's set you up for the day. We begin with our top story. The Trump administration's actions against Fed Chair Jerome Powell have triggered a backlash that could derail the White House's plans to tighten control over the central bank. Fed officials and US senators from both parties have pushed back on the investigation and reiterated the importance of an independent central bank.
Throughout that time, he has been completely dedicated and committed to the Federal Reserve's mission to support the American people. And throughout that time, he's proven himself to be a man of impeccable integrity and a man who has been calmly leading the Federal Reserve through times of heightened uncertainty and led us very effectively.
That's what this probe is. It's a pretext. It's a way to try to knock the legs out from Jerome Powell. I'm no Jerome Powell supporter, but I am a supporter of Fed independence. And the weaponization of the Department of Justice is fundamentally wrong.
Bloomberg senior editor Alistair Bull joins me now for more. Alistair, this is another obstacle in Trump's path. We know that he would like to get rid of Jay Powell. He said that he's nothing to do with the DOJ investigation. But could this slow down the replacement of Powell? Good morning, Alistair.
Morning, Lizzie. Thanks for having me on. So it could absolutely slow down the replacement of Jay Powell. But the most important thing, you showed a couple of clips from Democrats, but it's what Republican senators have been saying, particularly Tom Tillis, who is a senior Republican who's not standing for re-election. He's on the Senate Banking Committee, and he came out on Sunday night and said, until this legal matter is cleared up, I'm going to block any Fed nomination, any Trump nomination for the Fed. And because the split on the Senate Banking Committee is 13-11, if he crosses the aisle to the Democrat side, it deadlocks the Senate Banking Committee. It means that no Trump nomination for the Fed can move through the Banking Committee to the floor. And furthermore, Powell himself, although his term as chair ends in May, he has a governor's term that runs until January 2028. So if he decides to stick around, he can stay on the board and further thwart Trump and kind of lead a resistance against the president, going completely against Trump's goal, which is to lower borrowing costs and force the Fed, browbeat the Fed into cutting interest rates even if they don't think it's warranted by the economy.
OK, so in fact, this could have the opposite effect of what the president would like. He would like rates to be lower, but in fact, this could change the reaction function of the Federal Reserve.
Well, I'm not sure they'd do anything they didn't think was warranted by the economic data. I think that's pretty clear. And Powell has said that time and again. But what it does do is it undermines investor confidence in the integrity of US monetary policy. And that's going to make them require, or they're going to be inclined to require a higher return for holding US assets. That's going to drive up US borrowing costs. Now, you saw a little bit of that yesterday as markets reacted to the Sunday news. 10-year Treasury yields inched up. They've kind of stabilized a bit, but they certainly haven't gone down. And the 10-year Treasury is very important for the mortgage market. And this goes to the crux of what the Trump administration wants to do. They're pushing, they know they're fighting a tight election, midterm election at the end of this year. They're making affordability and housing affordability a central part of their message. And driving down mortgage costs is not going to happen if you're undermining people's confidence in the integrity of the Federal Reserve.
OK, Alistair, thank you so much for that. Alistair Bull, Bloomberg's senior editor. Now, let's take a closer look at how markets are digesting these attacks on the Fed. I'm joined by Paul Dobson, Bloomberg's executive editor for Asia markets. Paul, when we spoke yesterday, the Sell America trade was in full effect after this renewed threat to the Fed. And then later in the session, the S&P hit a fresh record. How worried is the market then about this attack on the Fed?
Yeah, good morning, Lizzie. So the way that it played out yesterday, those fears weren't fully expressed, as you explained already, with the fact that equities managed to find themselves at another record high, admittedly with very small gains. I think there's two ways that you can maybe look at it. One of them is perhaps the idea that actually market participants have come to the conclusion that the process is not going to have strong legs because it doesn't have that support. You heard the voices and the criticism of it. And we even heard the Bessent, the member of the US administration, who would be sort of dogmatic about some of these things, was saying that he doesn't really support it and, standing up for the value of Fed independence as well. And even Donald Trump has sort of distanced himself a little bit from it in some respects. And so maybe there's that consideration that actually, this is a bit of a rogue probe, won't go that far. But I think that the other thing that is important to note is, although stocks did manage to eke out gains, although bonds paired some of their losses, the dollar did remain weaker. And if you look at the performance of equities all around the rest of the world, including today in Asia again, there's a lot more outperformance. So even if you're not in a full sell America kind of frame of mind, you are still thinking a lot like we were last year that the rest of the world is maybe offering better opportunities than putting all of your eggs into the US basket.
OK, and we also get that US CPI report out later today, Paul. What are you looking for in it and how crucial is it? Because last time, of course, we had that Swiss cheese CPI report full of holes, deeply flawed. Can we trust this one?
Exactly. Well, certainly we could trust it a lot more than the last one. I don't know that everybody is completely convinced that the data will be totally complete. And it may take a while for everything to catch up and normalize again. What we're expecting to see from it is only a modest increase from the very low numbers that we had in that Holy report. And so that would be taken by the market, I think, as good news. The idea that inflation is gradually cooling, and then people will be passing through the details to see where those elements are and which parts the Fed is paying attention to as well. I think on bigger picture, though, everybody backed away from the idea that the Fed is going to cut in January. A lot of the banks changed their calls and pushed them further into the year. The market is priced for two, one in the first half, one in the second half. It would take quite a big change in the inflation numbers to really disrupt that sort of market pricing at the moment. So it would be more kind of mood music. If we do see a cooling of inflation, then probably equities would take that as relatively good news. If we saw a very strong reading, then maybe people would be more concerned. But otherwise, I think that it will be very hard to get a large market reaction off the back of those numbers.
OK, Paul, thank you so much for that. Bloomberg's Paul Dobson there. Well, as he says, Japanese stocks are surging today with the yen weakening as reports suggest that Prime Minister Sanae Takaichi intends to call a snap election. Let's get more on the market side of things with Winnie Xu in Hong Kong. Because, Winnie, it seems that the Takaichi trade is back in action. Good morning.
Morning, Lizzie. Exactly. We are seeing that Takaichi trade back to life. As you mentioned, cross-asset, it's really showing that trend with the topics in the Nikkei, both benchmarks up more than 2% to fresh record highs after markets coming back after a holiday. And on the other hand, you're seeing weakness coming through for the Japanese yen. We're talking about the weakest level since July 2024 as the yen continued to inch towards that 159 level against the dollar. And similarly, the weakness in the bond space as well, with yields steepening, and also 10-year yield here up about 7 basis points. And it is also still really being driven by the overall expectation for further stimulus and also Takaichi's fiscal expansionary policy. Now you flip the board and take a look at what sectors are moving on that Takaichi trade. Clearly, we are seeing that defense sector, for example, Kawasaki heavy here, and also AI-related names as well as nuclear-related names all surging because these are her key strategic focus areas. And also similarly, we're seeing some gains when it comes to the exporters rising on the weakness of the yen. And speaking of currency weakness, we also want to take a look at another currency in our region that has been weakening. As you flip the board and take a look at how the Korea won is doing, actually weakening for a 9th session and headed for its longest losing streak since 2008. And that's really being driven by how local investors are putting money into other markets outside of their home country. And when it comes to the stock market of South Korea, actually rising to another record high, with the Korea Stock Exchange planning to extend its trading hours from 6.5 hours per day to now 12 hours as part of that reform. So a lot of excitement in markets like South Korea and Japan in our region. Back to you, Lizzie.
Winnie, you'll never rest. What will you do? Winnie Shuther in Hong Kong, thank you so much. Well, I want to dive now more deeply into the politics of that Japan story, and we're joined by Bloomberg's Alice French out of Tokyo now. Alice, why all this speculation around an election, and why now? Good morning.
Good morning. Yes, you join me after a rather eventful return from our 3-day weekend here in Tokyo. And that's, as you say, because we've been having multiple reports now suggesting that Prime Minister Takaichi is moving towards dissolving Parliament and calling a snap election, perhaps as soon as next month. Now, the expectation is that, Takaichi's approval ratings are up pretty high, some polls suggesting they could be even more than 70% in favor of her cabinet. And so it's a pretty good time to try and kind of bolster her mandate. Of course, we know that her ruling Liberal Democratic Party is in a minority in both houses of Parliament currently, but that hasn't stopped her from moving forward with her expansionary fiscal policy. She unveiled Japan's biggest fiscal package since COVID a couple of months ago, that 21 trillion yen package, and that's been boosting sectors, as Winnie was talking about, from AI to defense to quantum computing over the last couple of months, and we've really seen a reignition in that trade today on expectations that if there were an election, Takaichi could get, even more seats in Parliament, and we would have even more fiscal expansion for longer.
And so what about the other potential market implications of an election? The Takaichi trade very much in swing today, but what could happen beyond that election, Alice?
It's a good question, right? And of course, it's worth saying that even if there were an election, there's no guarantee that the LDP would necessarily get a majority. And that could even upset, the political stability even more so, which is likely to weigh particularly on bonds. We know that JGBs have come under pressure in the last few months because of these worries about Japan's expanding fiscal burden. That's only set to continue as this Takaichi trade plays out. And of course, the kind of big news today has, of course, been the yen, which is now down at around its weakest level against the dollar since summer 2024, and we're edging closer to that 159, 160 level against the dollar, which people here are starting to talk about the possibility of government intervention. We know that Finance Minister Katayama this morning came out and said that she's already spoken to the US about concerns around those one-way currency moves. And whilst a weak yen is a tailwind for exporter stocks, at least for the time being, volatility in the currency is not going to be a good thing, and there's a possibility that extreme yen weakening, if it does continue, could end up weighing on people's outlook for the economy. Of course, we have inflation already here. People are really feeling that rising cost of living bite, and so it's definitely not all kind of rosy, but at least in the immediate term, that Takaichi trade and that kind of excitement around that fiscal spending and those sectors that benefit from her government spending policies are seeing tailwinds today. today, but it'll be interesting, as we get more reports and we get more details about this potential election and how it might play out. The assets are all moving in sort of different directions, and whilst the stocks are up, as we've been saying, at record highs again today, of course, that does mean that they're more expensive, and people might be getting more cautious.
OK, Alice, thank you so much for that look ahead. That's Bloomberg's Alice French out of Tokyo there. Well, still ahead on Daybreak Europe, a crucial appeal beginning for French far-right leader Marine Le Pen. We're going to discuss what it means for her presidential ambitions with Cardiff University politics lecturer Marta Lorimer. That's later on in today's show. But first, President Trump ramps up the pressure on Iran with new tariff threats. We'll be speaking with the Iran project director and senior advisor at International Crisis Group next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Well, US President Donald Trump says he's imposing a 25% tariff on goods from countries doing business with Iran after weeks of mass unrest across the country. The action ramps up the pressure on the government in Tehran, while also having the potential to disrupt major US trading relationships around the globe. Joining me for analysis now is Ali Vaez, Iran project director and senior advisor at International Crisis Group. Ali, good morning. Thank you so much for making time for us. I wonder how much of a threat the protests, which, of course, the Iranian foreign minister claims is now under control, actually pose to the regime. Is Iran just trying to stave off US intervention by projecting control here?
Well, this was one of the most serious threats to the rule of the clerical regime in Iran in many years. But I think the reality is that because the regime faced that existential angst, it brought down the iron fist. It resulted in a bloodbath in the past few days. We're still in a complete internet shutdown, and it's hard to get an accurate image, but it appears that probably thousands of people have been killed. And as a result of it, I think the protests have fizzled out for now. But in this mighty battle between the state and the society in Iran, I think the regime might have won this battle, but it is not going to win the war.
OK, interesting. So this round is theirs. But how united is Iran's leadership right now? How in control of the security forces is the regime?
Look, we didn't see any defections or any cracks at the top during these protests. I think at the end of the day, the Iranian leadership understands that they're all sitting in the same boat, and if it sinks, they will all sink with it, with their vested economic interest in the status quo. But so is, unfortunately, at the other side, the opposition is still not united, is leaderless and organizational-less, and this is one of the reasons that it once again has not succeeded. But Lizzie, the reason I'm saying that protests will emerge again is that the regime is very good at suppressing protests, but it is not good at addressing the underlying causes of them. So it's basically just buying time until the next round of confrontation.
Well, to that point, President Trump says he's imposing a 25% tariff on Iran's business partners. How much will that economic pressure add to the likelihood that more protests will emerge in Iran?
Well, we have to see if that threat is really implementable, because Iran's biggest trading partner is China. And of course, the U.S. has a complicated relationship when it gets to imposition of tariffs on China. Second most important trading partner is the UAE, again, a close ally of the United States. And it's hard to imagine that these countries would be willing to really cut off all their ties with Iran overnight. But the Iranian economy is already in a downfall, and any threat would probably make the markets in Iran less hopeful about any kind of economic reprieve anytime soon, and that would just continue building up the pressure on the Iranian people from the outside and also from above, obviously with the regime's repression.
Well, as Washington debates its next steps, is there actually a risk that the White House does too little here, Ali?
Well, to be honest with you, already it's too late, because as I said, I think this round is probably over, or this movement is in decline. And the options in front of the president, honestly, are not very attractive. If he takes kinetic action, it risks turning into a regional conflagration that he certainly doesn't want. And if he pursues non-kinetic options like cyber attacks or enforcement of sanctions, then it's probably not going to move the needle that much.
Just finally, yes, this may be a round that's passed. It's too late, too little too late for the US. But given the weakening of Tehran at this point, how weakened are Iran's proxies as a result?
Well, the Iranian proxies have been weakened as a result of Israel going after them in full force since October 7th. The loss of Syria meant that Iran basically lost its logistical route to provide support for groups like Hezbollah in Lebanon. It's never been a question of money. It's more a question of logistics and facility. And the reason that these groups have been weakened is really Israeli military action against them.
OK, Ali, great to have you on. Ali Vaez, the Iran project director and senior advisor over at International Crisis Group. Thank you so much. We're just checking in on oil off the back of this tariff news, and we have Brent up 0.5% at $64 a barrel here. Of course, Iran is the fourth largest OPEC member. Trump saying that he'd impose a 25% tariff on the business partners of Iran. So it's hit the highest level since November. You can see it there at $64 a barrel on Brent. But coming up on Daybreak Europe, the race for rare earths. G7 finance ministers meeting to discuss how to secure crucial supplies as they look to pivot away from China. We'll bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Good morning if you're just joining us. To some other stories that we're following this morning now. Finance ministers from G7 nations met to discuss a path forward to, quote, address vulnerabilities in critical minerals supply chains. US Treasury Secretary Scott Bessent says that critical mineral supply chains have become vulnerable to disruption and manipulation. Critical minerals and so-called rare earths elements can be found in many nations around the world, but much of the processing occurs in China, which has given the country leverage in trade talks with the US. Elsewhere, Bloomberg has learned that the Trump administration is close to a trade deal with Taiwan that would lower American tariffs on goods from the self-governed island. It would also significantly expand TSMC's planned investment in chip production on US soil. Duties on Taiwanese imports would fall to 15% from the current level of 20%. And German Chancellor Friedrich Merz has met with India's Narendra Modi on his first trip to Asia since taking office, urging New Delhi to urgently conclude trade talks with the EU. Merz says the world should brace for more uncertainty with the return of what he calls global power politics. The two countries signed agreements covering areas such as critical minerals and traditional medicines. And China's Commerce Ministry has welcomed a move by the EU to consider replacing steep EV tariffs with minimum prices. The change would protect European automakers while allowing Chinese companies to retain profits. It comes as ties between Europe and the US fray over President Trump's threats to seek control of Greenland. And Bloomberg has learned that China is examining how Jane Street Group and other foreign firms participate in its $859 billion ETF market. Sources say regulators are seeking information on activities carried out by brokers. Well, that's a roundup of some of our top stories this morning. Coming up here on Daybreak Europe, French far-right leader Marine Le Pen's make or break appeal. We'll discuss what it means for her path to the presidency with Cardiff University politics lecturer Marta Lorimer next. That conversation coming up. This is Bloomberg. Good morning. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Fed fight pushback. The Trump administration's probe into the central bank triggers a backlash in Washington, with key Republicans warning Fed independence is being eroded. The yen weakens and Japan's stocks surge to record highs after a report that Prime Minister Sanae Takaichi plans to call a snap election for next month. Plus, President Trump threatens new tariffs on countries doing business with Iran, a move that risks upending America's fragile trade truce with China. A very good morning if you're just joining us. It's 6:30 a.m. here in London and your markets look like this. Asian stocks surging this morning. As I say, we have Japan at a record high, and this on reports that Takaichi, the Prime Minister of Japan, is going to call a snap election. You've also got futures pointing higher here in Europe as traders look for opportunities outside the US, futures pointing lower a touch on Wall Street. But we did have the S&P recovering yesterday, notably despite the Sell America trade earlier on in the day because of the threat to Fed independence. Now, let's take a look at the front pages this morning. We have the Financial Times leading on UBS boss Sergio Ermotti planning to step down in April of 2027. It comes as the Swiss lender is fighting the government over the threat of more stringent capital buffers. So we'll have more on that later on in the programme. But for now, let's turn over to the Wall Street Journal. They have the blowback for the Trump administration, potentially, that could be caused by this Fed probe into Jerome Powell, both in the Senate and the markets. And this includes how it could affect the president's nominees to replace Powell. The paper saying that those worried include Treasury Secretary Scott Bessent. Finally, let's flip over to the Times here in London, and we have special forces in Britain being lined up to storm Russian shadow fleet vessels. This after the UK Defence Secretary John Healey said that he'd like to detain President Putin and hold him to account for war crimes. Those are the front pages, but you can get a roundup of all the stories you need to know to get your day going today in our edition of Daybreak, which, of course, as always, Terminal subscribers can find by going to DAYB Go. Well, coming back to our top story here in Europe, Germany's foreign minister says that he's optimistic of Europe reaching a compromise with the US over Greenland after a meeting in Washington with Secretary of State Marco Rubio. European diplomats are scrambling to diffuse tensions with President Trump's administration as his threats to seize the island escalate. Let's get the latest now with Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, good morning. What have we learned so far from these talks, and what can we expect from other meetings that are taking place in Washington this week?
Yeah, well, Lizzie, if the status quo is option number one, and that is not acceptable to the United States for Greenland, and something needs to change there, and option number two, which is a full annexation of Greenland by the United States, is unacceptable to the Europeans and to the Danes, we have yet to find what option number three would look like, what a compromise would look like. And that is precisely what the German foreign minister was pitching yesterday to Marco Rubio in Washington, D.C. Johann Wadephul there standing next to Marco Rubio, giving a statement afterwards, but basically pitching this idea of a joint NATO Arctic mission that would be joined by a number of NATO allies, potentially the United States, and that is the sort of proposition that he's put forward to sort of Marco Rubio to see whether or not that gains some traction in Washington, D.C. Marco Rubio didn't make any statements after that meeting with Johann Wadephul, so we don't know really how that went down. And Wadephul himself, after that meeting, said he was hopeful that the United States would join in such a mission. That being said, Lizzie, hope is not really a strategy when it comes to dealing with the United States in Washington, D.C. and Donald Trump. We have heard in the last couple of days, Donald Trump is not dialing down the rhetoric on Greenland at all. In fact, he is escalating it fairly substantially. And we should say that Greenland and Denmark have basically offered the United States everything short of annexation. They've said, listen, you want to put more military personnel in Greenland? Fantastic. We have no problem with that. You want to open more bases? That's great. If you want to develop economic cooperation, that's also something that we're perfectly aligned with. That being said, if the Trump administration and Donald Trump's view is if we're paying to defend Greenland, then we should own it, it's going to find its limits pretty quickly in terms of what the Europeans can offer. If it is also about exploiting the mineral wealth of Greenland, if it is also about expanding the U.S. landmass, there's a very limited amount that the Europeans can actually give to Washington, D.C. and give to Donald Trump. That being said, Lizzie, our attention will focus tomorrow in Washington, D.C. when the Danish foreign minister, the Greenlandic foreign ministers will both be there meeting with Marco Rubio to see if they can make any sort of progress on that third option, a possible compromise.
Okay, Bloomberg's chief Europe correspondent Oliver Crook across all of those talks for us. We thank you. Well, staying in Europe, the French far-right leader Marine Le Pen will face fresh court hearings today in an appeal that will decide who will be able to run against Emmanuel Macron in the 2027 election. Le Pen was barred from running for office for 5 years after she and several members of the National Rally were found in March to have misused EU funds. For more, I'm joined by Cardiff University professor, politics lecturer Marta Lorimer. Good to see you, Marta. Thank you so much for joining us early this morning. We've had Le Pen calling this ban a witch hunt, so I do wonder how hard it will be to overturn it legally in this trial. Good morning.
Good morning. It is going to be very difficult for her to overturn it legally. The court in first instance did a huge amount of work to make sure that the conviction was sound. What she can hope is that the new court that is going to decide now will change the idea over her ineligibility. What happened in the first instance is that she was barred from running for 5 years and with immediate execution, whereas usually you would wait until a final decision before you bar someone from running for election. So essentially, her hope lies either in the fact that the ineligibility is reduced to, say, 1 year, which would allow her to run in the presidential election, or that it is completely removed, or that it is not applied with immediate effect, meaning that she could, in fact, appeal this decision to a further court, and only then, presumably after the election, would the ineligibility come into place.
Well, Marta, let's say that this appeal is successful. Even in that case, has the National Rally already accepted that Jordan Bardella is going to be its candidate at the presidential election in 2027? Has Plan B already become Plan A?
It's a very interesting question. It seems to be widely accepted that Marine Le Pen will not really be able to run. However, they are still playing this prospect down. Just yesterday, Jordan Bardella said to the press that he is not in the running for president, that he is only running for prime minister. So it seems to be that they're still saying, look, we have a plan B if it's necessary, but our plan A is still for Marine Le Pen to be the one running.
But if he does replace her, will that actually help the party electorally?
It might. Recent polling shows that Bardella would fare better than Le Pen. What we don't quite know at this stage, though, is how reliable this polling is. If it's just because most people believe that he is more likely to run, so they think that he has a better chance of winning, or if it's because they think that he is a better candidate. And those are two very different calculations here.
Yeah, I mean, you wonder to what extent he's polling well because we don't know who he'd be running against at this point. There's also the comparison to Emmanuel Macron when it comes to his youth, Jordan Bardella's age. How different a candidate is he? Could the youth actually work against him, unlike as it did for Macron?
Bardella does resemble Emmanuel Macron when he ran the first time around, precisely in the fact that he can play with this youthful image, with the fact that he is a somewhat anti-establishment candidate, because he is not, well, Bardella is a very familiar face in French politics, but Macron wasn't at the time. However, we are talking about very different candidates. Emmanuel Macron, when he ran, he had already had governmental responsibilities. He had already had professional responsibilities. He had not really been a career politician in the same way that Bardella has. And this is something that could work against Bardella. Bardella has never had a job outside of the parliament, outside of the European Parliament and outside of the National Rally. And this is something that if you are running to be the president of France, it could actually work against him. And it's precisely what the opposition is going to be hitting him with. It won't really affect the National Rally's voters much because they care more about being represented by someone that they feel understands them. But to become the president of France, you have to rally beyond your own camp. And this is something that is going to make it difficult, particularly for the center-right people who might vote for him, to actually go with it.
And it's been interesting taking in the geopolitics this week, Marta, hearing Bardella criticising Trump's ambitions, imperial ambitions, as he's put it, in Venezuela and Greenland. How different would foreign policy be under Bardella than it would under Marine Le Pen?
Foreign policy would likely be very, very similar. These are two leaders that are extremely aligned in most of their positions. They differ a little bit on the economics and particularly on who they think should vote for the national rally. So Marine Le Pen has this idea that the way to expand her electoral base is to speak to former voters of the left, whereas Bardella thinks that the way to expand the electoral base of the party is to get on board the center-right through particularly a more economically liberal political program. In terms of foreign policy, they are both going to struggle with Donald Trump. And Donald Trump is also becoming a problem domestically because, of course, his actions are not particularly popular. And the National Rally wants to avoid being seen as guilty by association or as too close to what is, at least in France, a wildly unpopular US leader.
OK, Marta, great to see you this morning. That's Cardiff University politics lecturer Marta Lorimer. Thank you. Well, coming up, we'll turn back to the corporate. US banking giants reporting fourth quarter earnings starting today, but shares are under pressure from an announcement on credit cards by President Trump. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some top corporate news this morning. A source says Meta plans to cut 10% of its Reality Labs division as soon as this week. The move is part of a strategy to shift funding away from some virtual reality products and into other AI wearables. Reality Labs has about 15,000 employees and has been losing billions of dollars each quarter. Elsewhere, shares in Ørsted are indicated higher on TradeGate. That's after a US judge ruled that the company can resume building a wind farm project off the coast of Rhode Island while it challenges the government's stop work order. It marks a major win for the Danish energy giant in an ongoing fight with the Trump administration over renewable energy. And Airbus says it expects aircraft engines to remain in tight supply this year. The outgoing CEO for Airbus Commercial Aircraft says the timing of engine deliveries on its best-selling A320 narrowbody continues to be an issue. Last year, engine shortages forced the company to build planes without engines. And while supplies did catch up by the end of the year, Airbus still faces challenges. And UBS CEO Sergio Ermotti says proposed new banking regulations in Switzerland go too far and the lender needs a competitive regulatory framework to grow. Speaking exclusively to Bloomberg, Ermotti also told us he's hoping for more clarity by the second half of the year.
We fully understand the necessity of taking the lessons learned from what happened at Credit Suisse. But we believe that the current proposals are not really reflecting what happened at Credit Suisse and are going too far. And therefore, we are contributing in the debate with our views on the matter. But this is now a political process. We hope we're going to get more clarity by the second half of the year.
Second half of the year. Are there compromises that you would potentially accept? And that conditions of doing business, is it a hindrance, obviously, to be still domiciled in Switzerland?
Oh, look, first of all, there is a compromise is usually between two people, negotiating something. We are not in a negotiation. It's a political process, and therefore we need to see what's coming out. As I said, our role right now is to make sure, on behalf of our shareholders, our employees, our clients, and in general to the public, that we contribute our views on the matter. But we are a Swiss bank. We are very proud to be a Swiss bank. We believe that is is a differentiating factor. We believe this is good for Switzerland, and we want to continue to operate as a Swiss bank going forward.
So it's not necessarily a compromise, because as you said, that would be a negotiation, right? But are you confident that they will come up and there will be a resolution that will be acceptable to UBS?
I cannot be confident about that. I think that I'm pleased to see that there is a political interest to go deeper and fully understand the details of this. It's very important to understand the details of what's going on. So such an important decision cannot be taken out of emotions or by people trying to drive the agenda by fear.
Well, that was Sergio Ermotti, UBS Group CEO, speaking exclusively to Bloomberg. But an FT report today suggests that Ermotti plans to step down in April of next year. Well, we can get more on that and other banking stories with Charlie Wells, as we have a raft of Wall Street earnings this week to look ahead to. Charlie, let's start with Ermotti. What do we know about his departure?
Lizzie, well, this officially kicks off a leadership race at one of the world's largest and most important banks. Now, Ermotti has been there since 2023 in his second stint as the head of this bank in order to oversee that transition, that integration of Credit Suisse into UBS. He has been fast at work on those plans, and they've gone relatively smoothly. But part of the plan of this transition has to bring in a successor, and we're going to see this come into focus very much on trend on Ermotti, trying to project this stability, this continuity. The timing is looking like it could be April 2027, according to reports, but they are not necessarily firmed out. But that would be opportune timing because that would come around the time of the UBS annual general meeting, allowing for a long leadership race and then that anointment later next year.
OK, well, turning to Wall Street, Charlie, we've got reports on job cuts at Citi and BlackRock. How's that all playing out?
Well, Lizzie, this is a turbulent start to earnings season, which is kicking off this week. We are seeing really cuts at these banks that are in transition. So if you think about Citigroup in the middle of a years-long transition, thanks to the tenure of Jane Fraser, we're hearing about 1,000 cuts this week at Citigroup. You look at BlackRock, the asset manager, turning into alternative assets on part of Larry Fink's plan, about 1% of global workforce being cut there. And then UBS, we're talking about their transition there, really a focus of job cuts coming in mid-January. So this is some of the turbulence we're seeing heading into earnings season. We're also hearing about some changes, some policy changes announced from Donald Trump this week that has been putting pressure on some of these banks, particularly those that issue credit cards. So Donald Trump talking about a 10% cap on interest rates that really hit share prices of card issuers and banks yesterday.
And Charlie, we're going to get JP Morgan results today. Just give us a preview of what we're expecting from Fortress Diamond.
So what's really important here is to zoom out from some of this turbulence this week and look back to the year that we've had, where we really have seen that KBW Bank Index of major lenders outperforming the broader market. So we're going in with strong fundamentals, the assumption of strong reports coming. One of the factors that's really leading here is deal flow. We're finally seeing those deals come in strong. It's looking like 2025 was the best year for deals since 2021, that record-setting year. That is translating into fees for the investment banking units. We're looking at strong trading revenue as well, but there are risks ahead. Do not get complacent, particularly given the turbulence that we've seen this week. There are risks from surprises on expenses. Those hit JP Morgan shares last month when they were announced. We could see commentary about AI, about potential softness in that M&A activity that has driven so much optimism. And then, of course, these macro risks, these policy risks that loom large.
All right, Charlie, thank you so much for setting us up for those earnings. You'll be with us throughout the week to take us through those results. And Charlie, of course, will be taking part in a live Q&A later on today on the UK's souring relationship with the super rich. So that kicks off at 2 p.m. London time. And while anyone can listen to the conversation, Bloomberg Digital subscribers and terminal clients have the exclusive opportunity to ask our team live questions. So don't miss that with Charlie. Well, staying in the UK, the BBC has signalled some of its defences against President Donald Trump's $10 billion defamation lawsuit, telling a judge that the documentary documentary at the centre of the case was fair, despite a misleading edit of one segment. The British broadcaster asked a federal judge in Miami to pause the exchange of evidence until a ruling is issued on the BBC's motion to dismiss the case, due in March. The BBC also said it'll aim to move the case to New York because it relates to a documentary that it, quote, did not create in Florida, produce in Florida, or air in Florida. Well, plenty more coming up right here on Daybreak Europe, so don't go anywhere. This is Bloomberg.
When you talk to members of Congress on both sides of the aisle, they understand this. They may have different rhetoric out in public, but you talk to them one-on-one, they understand how critical the Federal Reserve is, and they are going to push back. That's why I'm an optimist. I don't think they'll let this happen.
Well, that was former Philadelphia Fed President Patrick Harker addressing the DOJ investigations into current Fed Chair Jerome Powell and the possibility that they could lead to criminal litigation. Of course, we don't know how that investigation is going to impact the process of choosing Powell's replacement. Is Powell more likely to stay on as governor even beyond the term of his term as chair? So we keep an eye on that. But speaking of the Fed, of course, they've got some key data to pass today. We're waiting for the CPI numbers later on at 1:30 p.m. London time. Of course, the Fed does have a dual mandate. We got those unemployment numbers on Friday and traders all but wiping out bets of a Fed cut this month off the back of that unemployment print. But flip the board and I can show you what we're expecting from the CPI numbers. We are expecting it to stay elevated, according to economists' estimates. 2.7% is the core CPI reading for December that is expected. But don't forget just how flawed the November numbers were. That Swiss cheese CPI report full of holes because of the government shutdown. So hoping for a clear reading today when it comes to this inflation print. A lot riding on it. But you can find all of these charts and all the others that we use right here on Bloomberg TV by typing CHRT TV Go on your Bloomberg terminal. We've not just got CPI on the docket today. In terms of our risk events ahead, we also have, as Charlie Wells was previewing, those US bank earnings beginning on Wall Street. And then at 7 p.m. London time, we'll hear from the president himself. He's speaking at the Detroit Economic Club, ostensibly about car factory openings. But as ever, we keep our ears open for any pronouncements, both on the Fed and on geopolitics. A reminder that later on today, we'll be at the JP Morgan Healthcare Conference in San Francisco. We'll bring you interviews with top names, including the CEOs of Novo Nordisk, Roche, and the CFO of AstraZeneca. But that does it for Daybreak Europe. Opening trades coming up next, and a guy and Tom will take you to the open. This is Bloomberg.